Well and doing great. How about that honeymoon? Honeymoon always setting the tone. We got a great, I was going to say incredible. I hope by the end of this session, you've hit the thumbs up, you subscribe to the channel, and you hit the bell notification because it is an incredible session. In this session today, we are indeed going to talk about what is likely the greatest opportunity ahead. 2025 into 2026. That's a big statement, a really big statement. So I want you to go ahead and get into this with me. All right, we're looking here at the dollar, and the reason I'm starting off with the dollar is simply because we're getting close to what could potentially be a buy impulse. The dotted green line. It was tested first into February, and then again in May, and then again late May, and once again we're into that area. Currently, we're positioned on the sell side for the U.S. dollar as this bearish continuation pattern has broken down. However, right here today, we have FOMC and the dollar potentially by the end of the day keying off of it, regardless of what people's beliefs are. Again, when we went first really bearish the dollar over here, a lot of people obviously were not bearish at the dollar yet. We're able to ride that trade very far down and then flip flopping long, flip flopping back short. This could be another flip flop, or it could be a very crowded short trade actually getting ready to punish some shorts. We'll figure it out. We'll make sure we stay on the right side. Oil continues to consolidate its gains as the situation in the Middle East continues to be very fluid and very frightening. 10-year today is ahead of the Fed. Well, it's just still going sideways, and it's been now for a couple of weeks. Maybe we'll get some, currently undergoing a sell impulse. Zooming out over here, this is the 10-year. Zooming out, to me, it's one big, massive coil. It's getting ready for a big move. A lot of people here for sure are like, we're close to 5%. I don't think that it could go higher. It could go higher. The market will be able to absorb it. And what they're thinking is that likely this is a good place to go uh, bid on bonds. I don't think so. I think ultimately this is going to break out to the upside. Now, whether or not we come back down and test close to 4%, hold this area of support before breaking out to the upside, I don't know. It seems to be a little, I don't want to say it's very counter trend. I know a lot of friends who are definitely bidding bonds up here. So I feel like in one sense it's counter trend. And then you also know that like people like Stanley Druckenmiller continues to hold his short to 10-year position, as well as do people like Paul Tudor Jones. So I guess, but that's my feeling that there's a good chance that this goes up again once we take out this area of support. We have this confluence over here. This is like an underbelly. That would be where I say, well, guess what? It doesn't even matter what I thought was going to happen. This is a safe place that you should be, in my opinion, bid on the 10-year. Ace, thanks for smashing the like button. You're gonna, you, you, and many others are really gonna appreciate today's number one trade opportunity. So let's keep going over here. We see the dollar coming. This is again, a lot of people down here are like, oh, the US dollar just entered the fun zone, expecting it to continue to sell off drastically. Maybe unlikely. If we break outside that channel, that would be for me the last bit of support, and I would expect some further downside. But support is support until it breaks. Here's another angle of the US dollar here ahead of the Fed, and you can see very clean and clear. That looks very close to where our dotted green line is. And then we have the into resistance right here, US dollar, Japanese yen. You can see dollar bid here as US dollar, Japanese yen is close after the Bank of Japan yesterday evening is close to that area of resistance seen through that view. Today we have FOMC, um, and the headline is the Fed is too uncertain to change anything, but watch for hawkish dots. Let's lean into this a little bit. Any nod to the increased deflationary signals? We have seen for a few months now increased deflationary signals, regardless of what people's uh, surveys, opinions about where inflation was going. We have now seen inflation data since the April tariffs have been instituted, and so far it's not showing up in the data. We have a few months in a row of strong deflationary signals. Is the Fed going to acknowledge that? And if they do, will that be looking that they're going to be next looking to start easing preeminently? That said, Morgan Stanley does not think the Fed has consensus to signal us. This is the surprise of the day. If this were to happen, this would be the surprise of the day. That said, Morgan Stanley does not believe so. The main message from the statement will be that uncertainty remains high. And I agree with that. I mean, uncertainty does remain high, and it's almost like they have this fine line to walk. It's hard to argue with the data, yet they continue to do so. JP Morgan thinks that the dots will revise in a modestly hawkish direction. Most notably, the median dot for this year goes from looking like two cuts in March to one cut next week. So, or they're not going to cut at all. We'll have to watch, or will there be a surprise cut today? Sincerely and seriously doubt it. We see that markets initially reacting positively today off of Trump signaling that Iran had reached out to them. Nevertheless, it remains very unclear what the next steps in that situation will be. Circle mooning over here as the Genesis Act has now been passed. The total stablecoin supply right now 250 billion. What are they estimating that will be? Has anyone seen any estimates potentially about what the expectations are? It escapes me right now. Some of the act, the Genius Act summarized. Basically, issuers and custodians must be able to freeze tokens on lawful orders. So what this means is, yes, and we've already seen this happen through Tether, right? They have the ability to freeze, right? Or take your money, so to say. Now, is this being done for people that are protesting, like the Canadian truckers? Not yet. Could something like that be done with the issues of Tether? Yes, they can. Did under the current banking system, like the dollar is digital, and like the amount of physical currency compared to the amount of digits running across screens is obviously a very, 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 very low percentage. And could they debank people already without stable coins? Yes. Is this a backdoor CBDC? Well, there's a lot of debate, and people think that this is backdoor CBDC. If you ask me, I mean, what was the difference already? It was already digital dollar was already a CBDC of sorts. It's not a CBDC in the sense that with a CBDC, you could charge different interest rates for different social economic backgrounds, for different races, for different like people who embrace different, let's say, beliefs. You could say, for example, if you don't spend this money within 120 days, it's going to disappear. There's a lot more architecture that you could do with the CBDC than with a stable coin. My own personal belief, and guys, this is coming from someone, first of all, who obviously believes in Bitcoin. I have tried and spent so much of my time and energy trying to make the bullish case for Bitcoin for as many people as possible, onboarding tens and tens and tens of thousands of people, why Bitcoin was four digits. Someone whose first red pill in life was the central banking system and the dollar debt based system. The absolute evil it is. I am completely against it. However, seems to me that did you see China express discomfort about stable coins buying US treasuries because what it does is entrench the US dollar's dominance as the reserve currency. I think that is largely what they're doing over here. And part of reserves, part of this, that you must go ahead and buy treasury instruments. Anyway, Circle responding very, very, very aggressively over here. And ever since the IPO opening up at 70, now here at 182. It's not the only IPO that has been pretty bullish. Core Weave continues here at all-time highs. Hey, they're both trading at 170. Oh no, okay, 182 on Circle. And then, of course, just keep an eye on the mooning meta planet at this point. It looks extremely overextended to me, but so are how ambitious are their plans in the next 2 years to try to gain 1% of the supply. Let's take a look over here and see what's going on now with Bitcoin. Continues consolidating underneath this resistance. Now, of course, we could get a breakdown, and we're pretty close to a breakdown, actually. We know that we have Bitcoin bull runs still into the market over here, which suggests that upside momentum can continue. We see that we are on the sidelines on all of our swing trading Bitcoin templates. By the way, Ethereum's also now back on the sidelines, and Cardano, as Charles Hopkins gets ready to potentially sell a portion of the Cardano treasury to buy Bitcoin, continues to be under pressure, currently in a short trade, 12% into profit. Solana buy side only on the sidelines. I said to you that potentially Bitcoin is getting ready here to break down. So I'll dig into that in 1 second. Before I do, into our stocks, we're looking at TQQQ continuing here to hold this position, currently 11% into profit. NVIDIA also with the open position, 2% into profit. Tesla remains sidelined. Is Tesla getting close to entering into the market? Well, depending on the market's reaction today, from the FOMC, if we are able to continue we've been in a very tight range the last couple of weeks, but it's gently sloping upwards. If that is able to continue, yesterday we looked at some potential warning signs into the end of June, including the buyback blackout window beginning, and by the end of the month, really, really starting to hit, coming down from roughly right now about $40 billion in buybacks all the way down to 5 billion. Tesla, yeah, she's close. She's close. And we'll see if Tesla's able to play a little bit of catch up. We had a stop loss here on the spot ETF, IBIT, taking a loss over here, just over 1.5%, currently out of the market as well. And MicroStrategy continues here, very close also to flirting with the potential. Did you see in yesterday's video? In yesterday's video, we were hold on. We're hold on. We're getting there. We're getting there. You know what? First, we got to cover the markets and make sure that we get. We got to make sure that each and every day we're able to cover our positioning, how we're currently positioned, and have our pulse on the mark. This includes TA. This includes the macro. This includes putting them together. And we'll get to the fun stuff of what is the best trade of 2025 and 2026 in just a moment. MicroStrategy. We were looking yesterday at Bitcoin, and I was looking. I said, "Oh, this reminds me of like 2012 when Bitcoin had that double wave." And then it's like the same exact fractal that is lining up here on MicroStrategy, the same exact, including this, which looks like a bull flag to me, until the launch. And not to say that the launch is going to happen or not, but you know what? Our template very close here to buying it, and then we'll see. Boom. Oh yeah, so I almost got Oh, I wanted to show you this. Jordan chicken scratches. And nothing more than a chicken scratch over here. This is a one-touch yellow trend line over here, and we are coming close to it. So yeah, we talked about potential breakdown on Bitcoin. Yeah, I'd be watching it. I don't know which one is the right one over here. Check this out. Is it looking for that one touch over there for a resumption out, having to clear above what would be that actually that um recent daily high, or does this angle, which lines up pretty well over there. I guess they're coming into the same place. It doesn't really matter. Hey, these trend line breaks carry weight, whether you believe it or not. I'm not trying to convince you today, though. Most of you know. Um, no breakdown. Tesla is right now, currently, and been out of the market. Tesla over here. I mean, it had this little trade, which unfortunately was up about 10% in unrealized profits and didn't take any. Run at 15% in unrealized profits and didn't take any. And it's currently out of the market. I mean, what a beautiful exit before that 14% drop. And you can see that Tesla has actually been able to recapture that. Why would you give back 14, 15% profit? I think it's just like if you come over here and you take a look at what the average winning trade is 30%. So being up 15% is not a big deal. What's the average losing trade? 1.7. So you're telling me that you have roughly a 14 to 1 win to loss ratio? Uh-huh. What's the largest winning trade percent? 170%. You can see over here that percent profitable is 30%, but it's with a 14 to 1 risk to reward ratio. So you've heard it before. The best systems cut their losers short and push their winners. That happened to be a trade that didn't push. It went 15% into unrealized gains, but it didn't have any carry to it. Let's keep going over here and get into why you haven't yet hit the like button. Now, if you enjoy being here, do go ahead and hit the like button. If you're not yet subscribed to CTM, go ahead and do that as well. Let's move over and talk about some things that are going on with what potentially is the best trade of 2025 into 2026. I'm going to start this off over here, though. I'm in December 2018. And in December in 2018, it's probably this. I don't know the exact date. It's probably Wednesday the 12th. So if it's not Wednesday the 12th, it's the following Wednesday. It was an FOMC day. It's not US dollar, Japanese yen either. So which could be a bombastic trade this year, right? So the yen, and I imagine by the fall we get some follow through. It could be a bombastic trade, but this trade is let's keep going. So in this area over here, though, and just to point out, it was Paul Tudor Jones and the Fed. They hiked rates, and as they hiked rates, he said that was a policy mistake, and this will be the turn from here on in. The Fed will be forced to lower rates. And I remember it like it just really, for whatever reason, seeing like that day, the Fed hiking, and then Paul Tudor Jones getting out on the networks and saying that was a policy mistake. That was the turn. From here on in, rates will go lower. And look what happened. Indeed, you saw rates not only go significantly lower, that ran us into the crisis. And then they went down. So before the crisis, they would have gone somewhere, let's say, below 1.5%. Now, that was a pretty big deal. This is also where Bitcoin bottomed. And when Bitcoin bottomed over here, let's take a look at a Bitcoin chart really quick. I just want to tell you what type of X percent gain that was. So let me far this chart is fine. Let me come back. Oh, guys, this was so beautiful. This was CTM talking about right over here. This is the summer of 2021. So like everyone was really scared. We were like, Bitcoin by October will make a new all-time high. Wave one into wave two, it made the new all-time high. It didn't go into liftoff. I thought it was going to significantly appreciate in price right here. But what happened was there were people out there scamming, selling Bitcoin they didn't have. FTX wound up being very, very bad indeed. And then this was probably one of the best calls. De-risk. This is a technical breakdown, 53,140. But I'm trying to get over here into where the Fed makes the mistake. And this is where Paul Tudor Jones says the Fed just made a policy mistake. From here on in, the Fed will be lowering rates. And Bitcoin from this moment on to the top. I have no idea let's go from the very bottom over here. And look at that massive, massive 1,800% gain to the top. I remember over here, there's a tweet over here right into January where I said, blood in the streets. This is the time to buy. Now, we weren't together at that particular time. This is when we were together. I called the bull market breakout and we went almost 600%, 568%. That was a pretty wild, that's to the peak though, to the breakdown of the first breakdown of the first de-risk breakdown. This was a 450%. The second de-risk breakdown was the break of 35. That was a 274. And then at 17, or 27, I should say, that was the third de-risk level. Guys, it's not easy at all to call a bottom, and it's not easy to call a top. We did call the bull market break that at 17,250, and that remains in play till today. How much further does Bitcoin have to go in this bull market? I mean, a great unknown, a great unknown in so much as that is the Bitcoin Act going to be passed? What's the macro ahead? I don't know. Does anyone think from where Bitcoin is today that in the next year, does anyone think in the next year? I certainly do not. Does anyone else think in the next year that you could have a 600% return on Bitcoin? So do you think, hold on one second. I certainly do not. Does anyone here think that in the next, we're talking about what is the best trade in 2025 into 2026. So I'm saying in the next 12 months, I'm giving you plenty of runway. Do you think that Bitcoin has the opportunity to hit $700,000? Obviously, none of us do. What is potentially the best trade right now, the best opportunity? We talked about Paul Tudor Jones calling this massive trade over here. Well, what I mean, it depends on what duration you're buying. There's a significant chance that when the Fed lowered rates, you saw well, 2-year has been trending down since. What's the 10-year been doing? Well, the 10-year has been trending up. Okay. What about the 20-year? Long-term duration is trending up. 30-year trending up. 2-year hasn't gained any rollover momentum yet. Remember when we called in 2022 the like 9.1 CPI print? We were like, that's the peak right there. But it took 3 months, 4 months in order for those deflationary forces then to begin to roll over. Yep, I firmly believe that with just the current rate of adoption continuing on Bitcoin, Bitcoin is going to continue to do Bitcoin things. And that even though we could see some potential, even major hiccups as we get closer to 2028 halving. That we're going to see the cycle high a lot closer to then to the 2024 halving. Bitcoin higher than it is today, for sure. I believe that. And let's keep going. So, I mean, very clear that if the Fed and expectations are, we looked at the FOMC today, and um, it seems that people are proposing that maybe the Fed is going to signal a slightly hawkish positioning in the dots and only one hike into the end of the year. Market currently pricing in two. And if that were to happen, I mean, maybe there's not even any hikes in this year. That wouldn't be surprising. But it does seem that as we get into next year, that Chairman Powell's term is up. He's not getting the job extended, and that the president is going to put someone in there that likely is going to be into lowering rates, helping the U.S. roll over some of its debt. Trump just believes that Powell's not participating. They don't have the same, let's say, incentives, right? They're not working for the same people. So, either which way. Who's so either which way. Let's leave it there. This is not a political thing. This is a market thing. So let's take a look at this. And one thing we're saying is that, well, since the Fed started cutting, the 2 year hasn't really gone anywhere, but it is headed sloping down. By the way, this trend line is over here. Is where are you wrong? Where did the 2 year begin to rise? You always want to know where you're wrong, and I like this little underbelly over here. Like this is an underbelly, and you can see the structure. The structure off of here continues. This would be the first signal that this trade is wrong, and then this would be an upward confirmation of that as well. So you could manage risk around that. You can manage risk really tightly around that. We looked at what happened coming back over here in 2018, and we said before the crisis, we had gone down as the Fed began cutting. We had come down, and the crisis obviously accelerated that. Do you think that we're going to have a crisis in the years ahead that could potentially cause the Fed to have to cut down towards the zero bound in order to reinstitute QE again? I don't know what type of probability I would give that. For that to happen, there needs to be some type of liquidity crisis. If there were to be some type of liquidity crisis in the next few years, then the Fed is going to have to cut down towards the lower bound in order to reinstitute QE. It's the only way that QE is effective. Ben Bernanke let us know that in 2012. Jerome Powell this year has also reiterated that the only way QE is effective when rates are down towards the zero bound. Now, I don't know whether or not there's going to be any type of crisis that's going to cause the big print. There is going to be a big print eventually. Trying to time that is very, very, very difficult. Hey, if you would have asked me, I would have said, as China has been in this deflationary, slow motion train wreck, that their big print would have come already. And it's not, because there's no liquidity crisis. The Fed is the lender of last resort, and if need be, there will be there to do that. Now, without a liquidity crisis, do you think that in the next 6 to 12 months that we're going to start seeing the Fed begin to cut rates with a new Fed chair in there who's going to be there to carry out the president's? Today, President Trump said, "You know what? Could I run for? Could I be appointed chair of the Federal Reserve? I would do a better job." That just seems like just typical Trump like jargon or whatever. Obviously, he doesn't, or he's not going to be the head chair, the Fed chair, but whoever is the Fed chair likely is going to be someone that is going to carry out his policy, and we're going to see rates begin to low. As they lower, we might see, and the 10 year is kind of in the middle. It's not really, long duration. I mean, it is 10 years, and it's in the medium though. Obviously, 20-year paper and 30-year paper, that's long duration, right? 20-year, and there's a lot of speculation out there that when the Fed does cut, that we will continue to see bonds move in the wrong direction. You would expect that as the Fed cuts, you see bonds go bid, but the thought out there is that long duration is going to follow the path that it did when the Fed did cut last time and continue to sell off. It's probably true, but I would think that this is also probably true that the 2-year, this very short term paper, as the Fed cuts, will move in the right direction, and that is bonds bid. So a lot of people are talking about the greatest trade being right now the continued bull steepener. Let me go ahead and just take one pause up. Did you see, by the way, this today? Guys, you might think this is crazy. You ready? President Trump is saying go long steepeners with 100 times leverage. It sounds insane, right? Does that sound insane to you? The president telling you to go long steepeners, which is go ahead and buying short-term duration 2-year and selling long-term. So for me, long-term would be 20-year. It'd be nice to get the 30-year. You can't do that. Now 100 times leverage. What's he talking about? This is going to really surprise you in 1 second. First, I want to come to this video I saw over the weekend that I really wanted to share with you. And this is Paul Tudor Jones. Paul Tudor Jones, the guy that I was telling you that I remembered after the Fed FOMC meeting in December 2018, said that the Fed just made a policy mistake. This is like a 1-minute clip I want you to listen to.
You could help us. Give us a tip. What's the one long you would hit for the next contest?
I would say probably the yield curve. It just depends on where I think it'll be higher at that point in time. Mine would be very esoteric, so let me think. Well, I would definitely be betting on substantially lower front-end rates. We'll have a new Fed chair within 6 months of that point in time, and I think Trump's going to pick someone who's going to be uber dovish.
Well, let's talk a little bit.
Okay. So, but by the way, I would definitely bet on short-term paper, 2-year short-term paper. Sorry, Alexi, I was reading that. And then I want to hear one more thing. I want to hear this portion of the clip as well. Let me fast forward over here. Again, this is probably just, again, another 30 seconds, another minute. But listen to what Paul Tudor Jones has to say as he expands on his thoughts.
Are you short the dollar? I mean, you mentioned you're into yield curve.
I would say that the easiest long-term trades are, the yield curve's going to steepen probably to historic wides. We're going to cut short-term rates dramatically in the next year. And the dollar will probably be lower because of that. A lot lower because of that.
How much lower? We're off 10% from our high right now. 8%.
Yeah. Listen to what he says here about the dollar. He's talking about the dollar. I obviously want to include that. The dollar is already off 10% off its high. Listen to what he says here, and the timing he's a little unsure about, but the ultimate move is what he talks about.
I would say I think that's a year from today. That's probably a realistic assumption.
So that's a little hard, right? He's like, where do you see the dollar? Do you see the dollar lower? He's like, yes, I see the dollar lower. And he says, well, the dollar's already off 10% from its highs. Where do you see the dollar? And the response is it's a little opaque. He says, a year from now, that's what I see. I interpret that to mean that he sees a year from now, the dollar being roughly 10% lower. Some rough estimation. I'm not holding him to that. However, which puts the dollar where? Let's just take a look really quick. So dollar 110 down to 100, off about 10%. So he's talking about 90 on the DXY. which takes us into some pretty significant support down over here. However, he said a year from now. That gives plenty of room over here. In the near term, if we see some favorable trade deals that begin to come in, for sure we could see a counter trend move to the dollar. Now you can say, well, the dollar's in a massive uptrend. Well, not, I mean, look, we're talking about over here, we're currently in a downtrend. This would be counter trend if the longer term move is expected to come down over here. Let's get back to talking about bonds. And because we're going to take the dollar session by session as it comes, making sure we use our TA to stay on the right side. When we had that first breakdown, I didn't expect and we were just on the right side. I didn't expect it to sell off so drastically as it did. That came off of the first cut. Question is why would the longer duration, if the Fed cuts, continue to sell off? And I mean, I think that you have to ask yourself, first of all, is, well, why did they on the most recent cut sell off as well? And if they did off of the most recent cut, does it potentially serve that they may continue to do so? And what are they trying to, like, what are they saying over here? 20 years is a long time from now. And most people, myself included, long term, we've entered into a secular bear market on bonds. That does not mean long term, 20 years is long term. And when we're talking about what's happening in the next 6 to 12 months, that's short term, right? That's not really long term. And probably what the bond market is foreseeing is that what happens in the near term. So between now and the next Fed cycle where the Fed comes in and reinflates, ultimately what's going to happen here, and we all know that, is that the further devaluation is going to continue. That, like, we are now at the point of cycle where we've gone from the extreme easing, and then we went to that rate shock, where they, remember, we've said, go from here on in, we're going to see sharper, more violent, quicker cycles. And the last time that the Fed instituted QE and began it was 2008. And then it took 12 years to 2020. I don't think it's going to be another 12 years, 2032, before they return to QE. Much quicker, sharper cycles. The sharper, violent was seen in the rate increases in 2022. Most people, most macro experts, everyone that you listen to, nobody saw it. You know that. We saw it. You know that nobody else saw it. Nobody else saw it. And that's going to continue. But that works both ways. The next easing is going to be the big print until the next big print, right? It's going to be a massively bigger print than the last one, just as the 2020 was a big print compared to the 2008. And that the bond market likely is pricing in, like, not in this near term what's going to, but they're pricing in the ramifications longer term. So I personally don't think, because the bull steepener is going short term. I'm sorry, buying short term, going long short term. Bonds are inverse, right? So that, like, when you're buying it, you're hoping they go down. So that there's that little nuance. And then long term, selling that long term paper, going short it. Except see. I feel personally that the safer trade is to forget the long end. Now, if you wanted to play the long end, right? What could you do? So we have TMV, which is the 20-year. And if you expect that you're going to see yields continue to sell off, you want to be buying this. This is probably the best way to go about playing short the long end. Now, many of you are currently and potentially long on TMF. So this is, if bonds go bid, the long end goes bid, you're going to be in the money. And you could say that, well, last time that they were, well, I guess you can't because it didn't exist over here. So, but again, the last time they cut, this trade hasn't gone bid, it's gone against it. And that's the worry, is that as they continue to cut, this actually continues to sell off further. Ultimately, what winds up happening, I do believe, and this is like getting a little bit off topic, and I'm going to return to topic in 1 second. Ultimately, I think what happens is that they stop issuing long-term paper. That's what I think is ultimately going to happen, because there's not going to be any type of demand for it. That's that's what I believe happens. So I'm saying and proposing, stay away from the long end. My own belief is that the long end has a strong possibility of continuing to sell off, and I mean, especially the 20 year. I even think that the 10 year here is likely, and I told you where I'm wrong, but likely going to wind up spiking upwards before able to come down. But the safe trade to me, the safest trade over here is the short term duration trade. And Trump was saying you should go 100x. Check this out over here. That's not going to seem that might seem a little sensational to you. This is on Friday what I was working out with Chat GBT, and I was saying, well, if the 2 year drops from where it is right now at 3.9 and it goes down to just below 2%. Now, just below 2%, it would be over here. We looked at what happened in 2018 before the crisis. If there's a crisis, by the way, at any point in time, and I think if I did a poll, I think most of you would think that within the next couple of years, I think I'm pushing it out longer than many. I think many of you think that there's going to be a liquidity crisis within the next 2 years, probably sooner than that. And if that happens, then the 2 year is not going to stop at 2%, and it's going lower and likely back down towards the zero bound. All right. So then this trade here that we're talking about as being the best opportunity becomes a grand slam home run if that were to happen. But you don't need that to happen. All you need to do, expectations are that we're going to see Fed chair coming in shortly, who's going to be lowering rates 2 year as rates were lowered. You saw yields going bid, coming down, and I'm just giving a target over here of just below 2%. Okay, so I just want to explain that trade over here in relation to what would be a grand slam home run. Now, Trump is telling you to go 100 leverage long on that. So check this out with me. So per contract on 2 year Treasury futures ZT, you have for approximately 2 year dropping from 3.95 to 1.94% is approximately $7,600 per contract. Okay. Now the leverage, each contract that you own is the leverage on treasuries is insane, right? Remember what this is why Raul told you in 2021 to buy bonds and wear diamonds. Obviously, that was probably the second to worst advice ever given. The worst advice ever given was probably Luna is risk free. But again, just think about that in reverse. But you're controlling $200,000 for each contract, right? Approximately, you're looking at $1,250 per contract, right? So if you get a gain of 7,600 per contract, if the trade does go down to just below 2%, that's about and roughly 160 times leverage. Now Trump is saying, "Hey, guys, Trump is the guy who get it, love him or hate him. That's irrelevant." The guy, remember the guy that said back in April, like you should buy. Oh, this is over here. Let me pull it up over here. This is the guy that told you over here to buy, right? Now this is the guy telling you to go 100x. That just came up today. This was being prepared for you before Trump said that, but it fits well into the narrative. In 2018, in December, right over here, this guy said you should buy stocks. Right there, he said it. Right. That was the first time he said it. This is the second time he said it, and now this guy is telling you you should go 100 leverage on the steepener. So, but I'm saying forget the long duration end, because that could potentially go either way. Yeah, I think that likely they'll continue in the direction that we've seen, where next time they lower rates, you're going to see long-term duration sell off. But that seems to be a less of a higher probability trade than the 2-year. And the 2-year seems to be a very strong probability trade. And look, Trump is telling you, you don't need to go full on max. Give yourself a little room, because between now and the next 6 months, you could get, look at you could get that underbelly break. You might want to take that trade off if that were happening. Might be a little too early for that trade. We could wind up coming back above over here, right? He's giving this trade plenty of room. You don't need to go max degen 160 times leverage, my man. And you're like, wow, that sounds absolutely aggressive. My man is telling you to go 100x leverage over here, but actually that's not such a degen move. Whether fake quote or not, it fits in perfectly. Like I said, Trump was irrelevant to this conversation. This had to do with dynamics of play, and the dynamics are that the next Fed chair coming in is likely going to be very dovish, is likely going to be lowering rates and aggressively. 2 years reaction to that is likely going to be very bullish. The bull steepener is expected to continue, where short duration is bid and long duration sells off. Forget the long duration, which, by the way, you can't play the 20-year in the futures market. You can play the 10-year, and to me, the 10-year, that's like the medium. It's not short-term paper, but it's not long-term paper. And you could play the 10-year in the futures market, but I feel much more comfortable about shorting longer-term duration. Since you can't do that in the futures market, the only play that I see is looking at TMB, which is 3 times levered short 20-year duration. But I'm saying you don't have to. My own belief is stay away from that portion. Go with the highest certainty probability, and that is 6 to 12 months from now, we are looking at 2-year at like substantially lower. And that's not pricing in the home run. That's by the way, I didn't show you, because I was showing you Bitcoin. Does anyone say Bitcoin is going to go up 600%? That's a 600% return on margin, coming up from 395 to 195. If you think, and let's cut that, but to cut that in half, like Trump is saying, or supposedly Trump is saying, go 100 long. Let's say that you cut that in half and you go 80 times leverage, and instead of 600, that's 300%. What other investment do you think has the potential to have anywhere close to a 300% return over the next 6 to 12 months? This is what I'm proposing. Obviously, we'll continue to follow it together. As far as rate cuts this year, market is pricing in 2. That's obviously dependent on data, and potentially Fed is going to posture here today for only 1 cut into the end of the year. We might get no cuts into the end of the year. We might get 2 cuts. Who knows what we get if there's a crisis? We don't know. But looking forward, as that new Fed chair comes in, regardless, that's when it looks like we're going to start seeing some rate cuts coming into the market. That's why this trade is being talked about and looked at. And best way to play the 2-year is the futures market. It's right here on the futures market. It's taking a look at the ZT, right? That's the best way to play it. All right, everyone. we wait for Powell to take the mic. We'll talk about it tomorrow and the ramifications about what the Fed chair has to say and the market's reaction. Until then, God bless you all. Lots of love, everyone. If you're new here, welcome. Everyone else, welcome back.